We are everywhere.
Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets begin the expiry week on a negative note, and the Nifty is trading below its 20 DMA. Banking stocks are underperforming while the volatility index inches higher. Speaking of the financials, HDFC twins are the principal laggards on the Nifty in terms of point contributions. Both are contributing nearly 40 points to Nifty's downside. One-time impairment led to Dr. Reddy's reporting a net loss of 570 crore in the third quarter, but the stock is the top gainer on Nifty. And the Nifty Metals Index is the top sectoral laggard in today's session, as JSW Steel, Hindalco, Tata Steel and also Vedanta are top 4 losers on the Nifty. Good afternoon, Neeraj. Outbreak of coronavirus seems to be impacting equities worldwide now.
Yeah, equities in commodities, crude, base metals, iron ore, etc. Everything has come off. And by the way, while we are staring at these losses, it's pertinent to watch what the markets which are functioning are doing and what are the Dow futures saying as well about trade right now. So Europe should come up on your screen. Dow futures will come up on your screen. We didn't have too much of trade in Asia with only the Nikkei functioning, and that was down. But European indices, well, the picture is red. FTSE is 100 odd points lower in the session today, and the Dow futures will also come up on your screen momentarily. They were up down about 0.8 or 0.9%. They're staying down, so it's not. Don't quite know whether this will continue to grind lower, but you can safely assume that volatility across indices will rise. Bring up our markets and the heat map and show you what's moving and what's not on the index. There was just 3 or 4 stocks in the green at the start. Now there would be slightly more, but still the breadth is extremely adverse. What's doing well? Dr. Reddy's after the numbers, 4.5% higher in trade, so really strong show by the pharma major. There's strength in ICICI Bank throughout the trading day today. Cipla's gained a little bit again. One more pharma stock giving company. Axis Bank continues to rise, so 3 days on a trot now. That's had a good run. And Maruti, contrary to what almost every technical analyst was suggesting the last 2 days, is actually in the green. Let's wait and watch if it corrects or whether it builds on from here. What's not doing well? Commodities, and you would have guessed. The top 4 losers are all commodity names. And again, no surprise. JSW Steel also has a results impact, but I think it's more to do with the fact that commodities across are down. And by the way, the biggest drag would be HDFC Bank. The heavyweight is down about 2.2% steadily from levels of 1280 to 1290. HDFC Bank is now trading at levels of about 1220 odd. So this one has certainly come off, and ahead of the results, HDFC 2 looking slightly wobbly. So the HDFC twins, they've been principal culprits, but commodities too being a big drag.
Yeah, but you can't say that for the mid caps and the small caps. The start of the year brought about that period of outperformance, and that seems to be the theme that we are prolonging now into the month of January. So there is a big difference between the large caps and the mid caps, almost an 8% differential in terms of outperformance of the mid caps and the small caps versus the benchmark Nifty. Today's session has seen gains in stocks like Edelweiss Financial Services, which is up about 10 odd percent. Godrej Agrovet is up about 5%. Pfizer, Prestige Estates post its results, opened positive by about 4.5 odd percent, and now it's trading up with gains of 3%. Nippon Life, that's up about 2.5%. What's losing is Jindal Steel and Power. Again, that metals pocket is looking weak. You've got Mahindra and Mahindra FinSec. You've got Imami, Future Consumer, Canara Bank, Max Financial, all trading with cuts in the session. On to the small cap index then, and we'll tell you what's moving there. Wockhardt has got a big 9% pop, and it's not just about today's session. Last 2 days as well, Wockhardt has been amongst the gainers list. Strides Pharma, Godfrey Phillips, Vakrangi. This was a recommendation that Rahul Mohinder had given on Countdown just a few days ago, and it seems to be working well. Chambal Fertilizers, Spandana Spurti, all doing well ahead of the budget. Delta Co-op, Avanti Feeds see some profit taking. First Source Solutions, Hindustan Copper, KC International are some of the bigger losers. in trade today. But also important to keep an eye out on the futures and options space. Navneet is going to highlight what's moving out there. Navneet.
Thanks for that, Davina. Well, the monthly expiry week has started on a very negative note. Nifty, in fact, opened below the 20 DMA. We've still defended the mark of 50 DMA for the day. Let's see. And it's far away from there. 12,120 is the mark, which I think on the downside traders will be watching out for. It's the expiry week, so monitor the rollovers as well. They will start to pick up tomorrow, a day after. But the January series, as of now, has seen addition of about 9%, indicating maybe there are some fresh short positions being taken in this market. Nifty Bank is the other one, which is down about close to 1% right now, and the January futures are indicating that there are fresh shorts being taken here as well. Volatility has spiked now owing to global cues or owing to run up to the budget as well, but it's up 7 to 8%, which may not be a very comforting sign for the bulls moving ahead. Options data, 12,200 call has been seeing significant amount of writing today. Almost 32 lakh shares have been added. There was an attempt of recovery. Remember, we did trade above the mark of 12,200 for a while. So 12,200 put, there was some intraday recovery, some addition coming in, but no respite there. I think 12,200 put as of now has seen unwinding in trade. So no fresh addition coming in, almost closer to 1.4 lakh shares have been shed there. The range remains 50 DMA, that's 12,100 thereabouts to about 12,300 is something I think traders will watch out. In terms of individual stock futures, Dr. Reddy's owing to strong operating performance this time around. Of course, there was a one-off due to which they've posted a loss, but it's gained on good amount of volumes today. The stock's also at its fresh 52-week high. There you go. When the numbers came in, the volume spiked. That's the white line projecting today's volume vis-a-vis the average volume of last 20 sessions. Cholamandalam Investment is the other F&O counter, which is up for the fourth straight day. Good going for this one. Long position seen on the future side, and this one's been trading above all its key moving averages. Look at the January futures OI build-up of nearly 32%. And lastly, JSW Steel, which is a top F&O loser, top Nifty loser as well, owing to a disappointing set of numbers. And largely, I think steel stocks are also trading weak. Clear signs of fresh shorting coming in on the future side, that the stock's trading with cuts of nearly 3%.
All right, let's begin with the global voice then. We've got Maximilian Kunkel of UBS Global Wealth joining in right now on the show. Maximilian, thanks very much for taking out the time. Let's talk about the overall risk that is now glaring, with regards to the entire contagion of the virus bearing down on global equity market sentiment. Do you think things can get worse once we come back from the Lunar Year celebrations?
Things will probably get worse once we come back, as the market is trying to price in something which is relatively uncertain, namely when exactly we're going to see the peak in death tolls. However, if you're taking a longer term stance, what we think this is likely a buying opportunity, specifically in emerging markets, as when we compared, for example, to the SARS episode in 2003, we are seeing that there is a very proactive stance towards containing the virus.
All right. Do you feel that aside from Asia and the rest of, in US for that matter, has started seeing, some scare around the same? The last time that this happened, when SARS took its toll between November 2002 to July 2003, India or the Indian market stayed pretty resilient. You actually didn't see much of a downfall even in the midst of the SARS scare. Do you feel we are fairly out of this and it's contained well enough for us and we're not going to see much of damage?
I think we have to put this into a broader perspective. Number one, we think that emerging markets per se are going to outperform globally this year, as the key issues for emerging markets over the last 2 years, strength of the US dollar, US real rates that were high in 2018, the US-China trade dispute, as well as Chinese growth slowdown, are all showing signs of improvement. Now, within emerging markets, we clearly feel that India is going to be one of the outperformers after a relatively lackluster performance in relative terms, for example, last year. And that is largely due to an acceleration of economic growth, clearly some credible reform momentum, and lastly, a significant acceleration in earnings growth. Now, if you put that into perspective and we then take the SARS element that you just indicated, we clearly feel that any underinvested international investors in India should use this as an opportunity to buy more Indian equities.
Less, do you feel it's still prudent to take, and do you feel that funds for that matter that have a big Asia exposure will likely take profits currently in the current scheme of things to come back later once the things when things start to settle in a bit? So profit taking could be seen even currently.
Only on the margin, really, because when we're looking at the data, what we don't really see is that international investors are overexposed neither to emerging markets nor within emerging markets to Indian equities. So any profit taking would likely only be seen on the margins. And in fact, actually, we think that allocations should start increasing as the year goes by.
Maximilian, if the risk is not contained with regard to coronavirus, and we've already started to witness risk off trade coming back into this sort of market, gold prices have inched up slightly. You've seen correction of crude oil prices as well. Do you think this as a trend will continue?
We don't think it's going to continue for very long. Obviously, it's very hard to tell at this stage. But again, if we go back to some of the historical areas that we can look back to, SARS being one of them, we feel that this is only going to be a shorter term main concern for markets and likely going to be something that investors with a longer term view should be buying into.
Okay, and you've also indicated your view on Indian markets within the emerging market basket remains pretty much bullish, and I'm sure the foreign investors will be keenly watching out for the union budget this Saturday, which is on 1st of February. What's in the wish list when you interact with the investors who are, putting their money into Indian equities?
I think the biggest wish list is clearly an acceleration of earnings and GDP growth, which in part can also come through what's going to be announced on the in the budget, but more importantly also some credible economic reform momentum, in particular with regards to labor market reforms and also the dealing of bad debts in the banking sector. Now we're seeing clearly signs of improvement there. If that is confirmed, if this is becoming more of a credible theme, then clearly international investors will start reallocating greater amounts of their investable assets into Indian equities.
All right, Maximilian, we leave it at that. Thank you very much for joining us this afternoon. That's a quick word coming in from UBS Global Wealth Managers on India. So they're still optimistic. Things, even if they start selling off with regards to Asia funds, it'll be just at the margin. You may actually see strong flows coming back in post that. Back to the markets then, and while we're looking at what the global markets have done, while the Dow futures did pose a significant downside, we've also seen Europe should pull up the rest of the European back as well to see what's happening out there, because Friday's session was obviously a big positive for Europe ahead of the entire downfall that US markets saw. Today, you've got an open of 1.5%, so they're also somewhat converging to what the rest of the world is doing. 1.5% under for FTSE 100, CAC, DAX, all of them losing out.
Well, let's get a management voice going. On a dull day, it was a strong performance for APL Apollo Tubes. The margins doubled due to a decline in raw material costs, while net profit too saw a multifold jump. Let's discuss the quarter gone by with Mr. Deepak Goyal, the CFO of the company, joins us right now on the show. Mr. Goyal, good having you. Thanks so much for joining in. I want to congratulations on a very good quarter. I want to first start off with an update that you gave early Jan, then we come to the quarter. This played a part in the quarter, of course, the 52% jump in volumes. What's led to this? Because this is seemingly a very large number compared to the averages that you've had in the past few years.
Yeah, we believe it's a combination of factors which have been delivering this growth, which includes improving product mix, branding, presence in the new locations, restocking at the dealer network, and general normalization of overall environment. And back of it, the market sentiment is very well improved. Overall, we are on the track to deliver our guidance of 20% volume growth in FY20.
What is the 9-month number, sir? I understand in quarter 2 it was just 11%, but quarter 3, since you've done 52% growth, what is the 9-month volume growth number?
9-month volume growth is around 25%.
Okay, so you saying if you want to stick to the averages of 20, which means that the volume growth number in quarter 4 will be materially lower than the averages of 20%.
Yeah, it would be double digit because in the last FY19's March volumes are very much higher. That momentum is continued from the March 19. So that's why we are saying we are quite hopeful that double digit growth will be continuing in the quarter 4 also.
Okay. What about the margin performance? Because I think that one too has done extremely well, the margin picture. What's worked in this quarter for you?
Margins are 3,500 rupees per ton in this quarter, and we will maintain the same in the coming quarter.
So are these numbers sustainable considering steel is a raw material for you, and we've been hearing from steel companies that they've been increasing prices for the last 3 months. Are these numbers sustainable in terms of margins and also the EBITDA per ton that's been posted?
Yeah, we believe that this number are sustainable because we are improving our product mix. We are increasing our branding premium in the market. In addition to it, we are focusing on the more or value-added products in our portfolio. That's why we are saying the margins will be better than the volume growth.
Okay, margins will be better than the volume growth. Correct me if I'm wrong, the fillip in volume growth of 50%, northwards of 50%, was it owing to the acquisitions also you made, be it Shankara or Trico during the quarter? So what was the like-to-like volume growth of the company for the quarter gone by?
Excluding Trico, our volume growth is 38% to 433,000 tons in this quarter.
And what's the target for the entire year, FY20, and also for the next year?
It's 16 lakh tons plus.
16 lakh ton. Okay, so just a word on your debt picture as well. What's the current debt on the books and how are you planning to reduce it?
Current debt on books is around 700 crores, excluding Trico, and including Trico is around 800 crores.
And how do you plan to reduce, and what's the ratio in terms of debt to equity?
Presently, debt to equity is 0.6 tax.
Right, Mr. Goyal, I just want to come and get in a sense from where has this volume come in? I mean, you'd earlier on highlighted that you're looking at a contribution of gain from market share from the unorganized sector. You're also looking at a contribution of gain in share from scrap steel pipe manufacturers. Add to that also innovative products, which means replacing aluminium, wood and RCC and use of ERW pipe. So where has the bulk of the volume growth come from?
Overall, we would say volume growth is coming from, it's a mix of so many things. It's the impact of branding also, restocking at our network and dealer network, and from the new usage of the product, and also we are taking sales from the unorganized sector or small players in the ERW segment. Basically, we are developing the markets in the bigger sections and value-added product side. So that will give the more benefit to us.
All right. Do you feel overall incremental volumes, how much more capacity needs to be added, if at all, to make sure that you meet your volume guidance, sir, in FY20? Any more capacity additions that you need to make?
Right now, no. Right now we are in the run rate of 17 lakh tons, and overall capacity is 25 lakh tons. So huge gap is there. For the next 1 to 2 years, we focus on the capacity utilization till 90-95%. Then we will think upon the further capex.
Okay. What do you need to do, sir, to improve realizations? And also last quarter there was an element of an inventory loss. Do you feel that will start to normalize?
Yeah. In the month of October, raw material prices are goes down, but now it's average out and market is now normalized.
Okay. EBITDA per ton, sir, with Apollo Tricoat, that was an expectation of about EBITDA per ton of rupees 180. With and without that, what's your target run rate now? EBITDA per ton, what are you targeting?
EBITDA per ton, including Apollo Tricoat, is around 3,500 rupees right now. So we will maintain the same.
What I meant was it will increase by 180 per ton. So you're expecting a higher contribution?
Yeah, we are expecting the higher contributions from Apollo.
Sir, certain reports are also indicating that there were some inventory gains which were seen in the quarter gone by, that's the December quarter, hence the numbers could be looking good. Could you just throw some light on that?
No, there is no inventory gain or loss in this quarter. So the closing price of the raw metal in the month of October almost same in the December month. So in the month of October, there is a down of around 1,500 rupees tons, and November and December is some gains in the prices. So there is no inventory gain or loss. It's a operational efficiency only. Or normalized EBITDA per ton is around 3,300 rupees per ton. We are sold by 150 rupees. Right now, excluding Tricoat, our EBITDA is 3,150. So we are struggling for achieving the higher EBITDA.
Okay,
We are not happy with the numbers. We are targeting 5,500 rupees.
5,500. And on consolidated basis across all your plants, what are the capacity utilization levels?
Capacity utilization right now is around 70-75%.
And do you see that increasing to 90-95% in the coming quarters?
Yeah.
Okay.
Yeah.
Okay.
Yeah.
Okay, Mr. Goyal, the expectations that people have is that while FY20 you'll do what you do with the kind of volume growth guidance that you've given, but higher realizations and maybe higher capacities, you might actually be able to up your operating numbers, operating profits and profit after taxes quite substantially. Some brokerage reports peg that number closer to 50% from FY20 levels. Is that a believable number?
No, it's not our guidance. We will deliver the volume growth in the double digit, and EBITDA will be better than the volume growth. It's our guidance.
Just one last question, Mr. Goyal. What do you expect blended margins, including Apollo Tricoat, once you kick in excess capacities from Apollo Tricoat as well? So what do you expect you to end the year in terms of blended margins?
Blended margin 3,500 rupees per ton. 3,500 blended margins. We are looking as a sustainable business.
And this would be including the excessive capacity from Apollo Tricoat, right?
Yes.
All right. Mr. Goyal, thank you so much for joining and really appreciate it.
Thank you.
I must say though, the stock has completely come off. My management is fairly positive, but I guess in everything related to metals, even though this is just purely a converter,
also, I think
that's actually, well, that's also a pertinent point because it run up quite a bit, but it started off so well, has now come off quite substantially. But this is a chart that our producer has just thrown up. The compounding, well, 3,800%, that's nearly 38 times in 10 years for APL Apollo. With
that would ideally work for many other stocks.
But 38 times is quite substantial, really. I mean, but quite a good wealth creation journey for APL Apollo. Let's see if they can continue doing that. The stock in today's session, as we said, just come off a little bit from the highs of the day. Let's wait and watch if it lasts. But also pertinent, as we said, to look at the last 1 month performance of APL Apollo. I think it's moved up from some 1,700, 1,750 odd rupees to about 2,130 right now. So there's a bit of, about 18% gains, excluding today. And you add the 3% of today's as well. I think you'll probably have some very strong numbers for APL Apollo over the last 1 month. So good going. Okay, moving on. The other stock that's done really well is Dr. Reddy's Laboratories, one of the top gainers on the Nifty after its third quarter numbers. Operationally strong quarter despite the 1,320 crore impairment charge that impacted the bottom line. Darshan takes us through the quarter gone by. Darshan, what stood out for you?
Yeah, so I think operationally it was a very good set of numbers. Overall, I think there was nothing to disappoint. And even this impairment that they did was actually a very good move that they did right now instead of, when they were launching it. So I'll just take you through some of the details. Revenues coming in at almost 4385 crores. The estimate that we had was 4194 crores. Now net losses because of this 1320 crore because of the Nuaring impairment that has happened. EBITDA at over 1,000 crores versus an estimate of 916 crores, and EBITDA margins at 23.2% versus an estimate of 21.8%. Now, some of the key factors that we need to watch out for: India and US were in line, but nevertheless, the PSAI revenues, the emerging market growth, all of them were extremely strong for Dr. Reddy's this time around. The gross margin improvement that happened this time around was a big surprise, and that was aided both by the global generics as well as the PSAI segment. R&D cost, however, was slightly muted at 9% of revenues versus 9.5%. But I don't think anyone's complaining on that. They managed to contain costs this time around. And finally, the management commentary in the press release was extremely confident. So that gives an indication that there is traction. Internals, global generics grew both on a year-on-year basis and quarter-on-quarter basis. PSAI revenues grew 16% over last year, which gives an indication that there is a lot of improvement that is happening, even though on a quarter-on-quarter basis there is a decline. Proprietary products hasn't been doing well for them, so that is it. On the US markets, yes, $225 million of revenues, close to that, coming in line with the $220 million that we had anticipated. They launched 5 new products during this quarter, and higher volumes in some of the key molecules aided business for them. Emerging markets was very good. Russia was up 20%. From the CIS country, Romania was up 26%. Rest of the world revenue up 12%. The commentary here was on basis of new products, the traction that they gave. India, however, was doing well. New products aided India business, improved realization in the base business. Volume growth was clearly being seen. And on Europe, growth of 52% on the back of new products and volume traction in the base business. So I think there's nothing to complain. And on the impairment, what I was saying, despite this 1,300 crore impairment that's been taken, analysts consider this to be a good move because they're taking it off the P&L right now, and once they launch, they won't have any cost that will coming in for the Novaring drug, because remember, Anjan has already launched it and they would want to launch this drug as soon as possible. So management commentary will be important, but on the face of it, it's a very strong number from Dr. Reddy's.
Thanks a lot, Darshan, for breaking down those numbers for us. And Dr. Reddy's currently is trading at days high with gains of 5%. In fact, the entire pharma pack is giving support in a weak market. You've got stocks like Aurobindo, Lupin, Glenmark. All of them have been sitting with good amount of gains. And Nifty Pharma Index is your top sectoral gainer as well, which is up about 2% in trade. All right, moving away from pharma then, the country's largest home loan lender, HDFC, also comes out with earnings today. Shefali Malik joins in with the expectations. Shefali, over to you.
Well, for HDFC, we are looking forward to a net interest income figure of 3,065 crores. That will be a growth of 6.4% on a YOY basis, and profit is expected to jump 2.8 times to 5,855 crores. Now, that will be mainly because of the fair value recognition that they've done on account of the stake that they now have in Bandhan Bank. That got recorded at the market value, and hence it will see gains of 9,020 crores, which will be accounted for in this quarter via P&L. So that is the main reason for such a strong boost coming in as far as the bottom line is concerned. Other operational metrics, AUM traction expected to be around 15 to 16 odd%. Within that, we look forward to the breakup of individual book and also of the developer book. Margins seen flat at about 2.5%, and also we look forward to the asset quality trends, especially to the builder book, that is the project finance loans that they do. And other than that, because they record gains of 9,000 crores on account of de-recognition of GRA and recognition of Bandhan in their books, the company has a policy of making around 30% provisioning whenever they have a one-off income. So we can expect provisioning to the tune of 3,000 crores, a one-time provisioning. And aside of that, the sell downs during the quarter for them fell about 40% on a sequential basis. So that will also reflect in the earnings. So overall, steady earnings for HDFC expected.
All right, Shefali, thanks very much for that. So we'll watch out for what HDFC does. Remember, the press conference happens about 3:45 today. Numbers should be out anytime. Government has now re-invited bids for Air India and its 2 subsidiaries. The new offer document, which was released today, has a lot of tweaks from the last one, perhaps accommodating some of the demands made by prospective bidders 2 years ago. Samit Sarkar is here to take us through what's changed in the last 2 years. Samit.
So if you see in 2018, when Government of India had floated the expression of interest to sell stake in Air India, Indigo was interested, but they wanted 100% ownership in Air India. Unlike government at that point of time was ready to sell only 76% stake. But this time this has changed. Now, this time the government is ready to sell their 100% stake in Air India, which also includes 100% stake in its subsidiary, that is Air India Express, and 50% stake in the ground handling unit, that is Air India SATS, that is the Airport Service Private Limited business. Now, along with this, to get more interest of buyers, the government has also eased the eligibility criteria. Now, earlier the net worth required for a bidder to be eligible to bid for Air India stood at close to 5,000 crore rupees, which has now been reduced to 3,500 crore rupees. Along with this, the profitability criteria has also been removed. Earlier, an interested bidder had to be profitable for at least 3 in the previous 5 years to bid for Air India, which has now been removed by the government of India. Along with this, the minimum shareholding norms have also been eased to interest more participation. Earlier, the minimum stake requirement in a consortium was around 20%, with lead member holding at least 51% stake in the company. However, now this has been reduced. The minimum stake has been reduced to 10%, with lead member holding only close to 26% stake in the company. Now, if you remember, in 2018, the buyer was also supposed to take a debt of close to 33,400 crore rupees with purchase of Air India. However, this time the debt amount has been debt amount that will be transferred with the stake sale is variable. Now, the fixed debt that will be transferred is close to 23,300 crore rupees. Along with this, certain identified current and non-current liabilities will also be transferred. However, there would be equivalent amount of current and non-current asset which will be transferred with that, which means that the net working capital will be zero as against a negative net working capital which was being transferred earlier in 2018. Now, Air India, along with this, if you see, the government has also allowed the buyer of Air India to sell and lease back the owned aircraft. Now, Air India owns nearly 82 aircrafts, which the buyer would be able to sell and lease back, which will not only lead to cash flow generation, but also will also give the buyer a fleet flexibility, which will also help the company reduce its debt going forward using the cash that it might generate by sale and lease back operations. Along with that, if you see on the operational side, there have been few changes. Firstly, the market share of Air India and Air India Express has increased both on the domestic and on the international front. The airline had a 50.6% market share on the international routes. Among the domestic airlines were around 12.7% stake in the domestic routes as of September 2019, which is higher than what it used to have earlier. Over the last 2 decades, the national carrier has also increased its primary network coverage by 5 destinations and secondary network coverage by 24 destinations. Now, secondary network coverage is through code share agreements, which currently stand at around 25 agreements as against 19 agreements that Air India had 2 years back. Along with this, the fleet size of Air India has also increased to 146 aircraft, of which 56% is owned, that is nearly 82 aircraft is owned by Air India, as against 2 years back when it had only 138 aircrafts, of which 62% were owned. So what is happening here is the number of owned aircraft have reduced and the number of leased aircraft has increased for Air India in the last 2 years.
Right. Samit, thanks very much for taking out the time and giving us those details there on the restructured bid on Air India and the details thereabout. Ajit Mishra of Religare Broking is joining us right now on the show. We'll have Hemen Kapadia shortly with us as well. Ajit, starting off first with the index itself. We're now at about 12,145. Does it warrant more downside? Would you open a short position considering that this is the expiry week, the monthly expiry week, and volatility could be extremely high?
Yeah, good afternoon, Devina. So yes, it's true that not only the expiry, it's a long week for us because on Saturday we have full day market with the union budget and plus the earnings are also there. So we expect volatility to remain high, but considering that Nifty could not surpass the level of 12,400 decisively last week and witnessed profit taking, though in the last 2 trading sessions we witnessed marginal profit, marginal rebound, but that the underperformance from the banking pack is clearly indicating that this negativity is here to stay. So yes, I would consider going short, but not at the current levels. I would rather wait for any pullback closer around, let's say, 12,200 mark, with a very small stop of closer around 12,260, 270, and closer around 12,100 to 12,090 is the immediate target. And similarly for the bank Nifty also, we have a negative bias. But since we have already seen a very strong, decline banking space, the rebound. One should wait and let this come to the levels which are visible on your screen.
Okay, that's Nifty Bank. Though remember, there has been a clear underperformance in the Nifty Bank versus even the Nifty index itself. Hemen Kapadia is here with us. Hemen, let's talk about your call on the indices, both the Nifty and the Nifty Bank.
Very good afternoon to you, Devina. I have a feeling that we're midway, too late to buy too early to sell. I don't think it's a sell yet. Yeah, short term possible. There was a gap around 12,000 levels, Evina, on the daily chart, which was partially filled when the markets went down last week. Now we gave a bounce because of that. I have a feeling, like Ajit mentioned also, the bank nifty is under pressure. So due to that, I think this gap, which is around 12,041, could get covered up. So I would go long over there. I don't think it's a short here because the mid caps are all over the place today. It's pharma popping like popcorn. So every day there's one sector which is playing musical chairs. So no, if I have to, I'd sell a strangle, maybe 12,400 and 11,900. But no, I don't see a particular trade. But if I were to, around 12,000, or if 12,000 briefly breaks, I'll go long on a call option, because I feel that we'll bounce back by the time the budget is anyway not very far away.
Okay, we're at day's low, reached the morning low also of 12,155 or 57. Nifty's down about 100 points. So let's see if there are any ideas coming from our techies with regard to individual stocks. Then, Hemen, I come back to you. What are you betting on?
Well, I like Pharma from a 4-year point of view. I like Pharma from short-term point of view also. But a buy call on Sun Pharma, it's already moved up a bit Navneet in the last hour, but it's still a buy on declines with stop loss of 437, target 461. The other one is Equitas. I think that the positional breakout, Ujjivan also. So buy in Equitas holdings at around 110, stop loss 105, target 120. Modest targets, I feel there's more headroom there.
Okay, that's buy on Equitas. Ajit, what about you? Individual stock ideas for this afternoon?
So, structurally, PSU banks are still the weakest. So, Ken Bank, I would prefer to go short, but not the current levels, because we've already seen a downtick of late. So, one should use any rebound closer around, let's say, 217, 218 to go short with 226 as a stop loss and 204 as a target area. Pharma definitely looks very strong on chart, so we have a contrarian trade considering that this outperformance will continue. So Biocon is a buy bet with the stop of around let's say 288 and close it around 310. That's the target.
Okay, so those are some technical calls. I want to pull up Siemens. I guess the stock is at the lowest point of the day. It's down as much as 4%. Remember, on Friday they announced an acquisition of CNS Electric, an Indian company which was giving, or rather will give them exposure to low voltage space as well. And the acquisition enterprise value is somewhere about 2,100 crore. Let's go across to Sameer Kalra of Target Investing, who joins us on the show, and take his rationale on this deal and how, whether this should irk the investors of Siemens. I was reading the report of Motilal Oswal, which said this is not the best use of cash that Siemens could have done.
So I think, again, Siemens always a history of these kind of deals, whether it's separation of their own internal businesses or some international deals where it always disappoints the investor. And this especially is at a very high valuation. I think that kind of a revenue and that kind of a revenue growth, if they are looking for, they could have had better valuations, first of all. Secondly, these kind of businesses are low margin businesses. Now, if you're going, and it's a very high competitive sector, especially the low voltage. So if you see over there, there's a continuous capex which you require. So there's low margin, low cash flows. So I think just to have a product line or expansion of a product line at a sacrificing level of that amount of equity as well. So I think it's better to stay away from Siemens and let this deal cool off. So
you think this could also impact the margins, blended margins going ahead? Because the note also says, the one I was reading, that CNS products are sold 7 to 8% cheaper compared to Siemens products.
So this will definitely impact the margin. This will definitely impact the cash flows as well.
Correct.
Because right now, that's why I think the cash deal never took place. Because it's rather sacrifice, the equity as of now and then give out cash flow burn later on. But I think on a longer, even a medium term, I don't think so this deal will become very motivating for investors to give a proper valuation of what they bought it for. So I think it's better to stay away, and I see a 10 to 15% kind of a downside due to this.
Okay, let me quickly take a technical call on this one. Hemen, on the charts with the 4% downtick that we've already seen, do you see more downside?
Yes, I think we're giving a downward bar reversal now today. Not exactly a good sign. We've supported 1520, but yes, it doesn't look good. The build-up has washed away. I guess, notwithstanding a small bounce, distinct weakness. I think further downside seems to be on the card.
All right, I just want to look at Asian Paints as well and what that stock has been doing. Remember, a stretch stock in terms of valuations, but the company has been focusing on increasing volumes in a very meaningful fashion. While we are seeing some pricing pressures coming in, but the volume growth has been high. They have been taking a hit on their margins to make sure that they garner that additional volume share as well. Do you feel, Samir, that in a market like this, it is prudent to focus on volumes right now and not think too much about margins, and when the environment improves, you can once again start to make sure that your prices are scaled up again?
So I think even on the volume, they've come from the high double digits to double digits. So if you see the commentary of, let's say, only that decorative business and the commentaries of 15 quarter, you're off from
They're
past 6
focusing
quarters.
on the lower price point products also, like distemper, putty, and
so that's where even if you are doing more focus on that kind of a volume, then your margin sacrifice is there, right? So any kind of upside risk to crude in the later year does not get factored in, because what happens if your lower end of the volume is higher, then your pricing power somewhere moves out of the business as well. It's not that easy to increase prices on the lower volume, lower bar of the volume which you are there, and that's where the premium on the valuations which you're receiving right now, given that you have the pricing power, that overall in the longer term goes off. Whether it does or it doesn't, next upside cycle on crude, it will be very difficult for Asian Paints to remain on these kind of valuations and these kind of margins, because your pricing power will cut off. If you see
that is the risk. Crude is
so that's what I'm saying. So if I have to give a future value, I cannot say that crude will stay here only.
Sure.
That's my upside risk, right, to the valuation that will stay here, and I can go on another 15 to 20% more premium than what I am. But on the downside, if I'm starting to invest in Asian Paints and I'm looking for that, I think it's better to stay away as of now. Maybe do a SIP route, that's better, because that hedges your downside risk as well. But a lump sum investment or a straight away increase in the portfolio right now is a very risky bet for me.
Wockhardt is the other stock, I think, which is now up 15%, as my producer tells me. When we started the show, it was up about 9%, and now it's scaled 15, almost 16% higher for Wockhardt now. 347. Hemen, a quick chart check on Wockhardt. Obviously, the numbers have come to the black, and we've seen how that's the kind of reaction that the stock has got to its earnings. But what have you? What kind of levels do you see for Wockhardt?
Month is not yet over, Devina, but highest volumes in the last 2 years. So obviously something has happened, obviously driven by the numbers. Currently, I believe that there is resistance around 350, and that's where we've gone to. So it's maybe there's an upside, but for me, it's definitely not a buy at this point in time. From a longer term point of view, yes, on a cool off, because we spent the last 5 months consolidating. The volume seems to suggest stronger hands are bought. I am bullish on the pharma sector for the next 4 years. I believe that's going to be the sector to watch out. So Wockhardt, it's high beta, it behaves in a very strong manner, either up or down. Worst is over, but at 345, no. 300, yes.
Well, let it deliver a couple of quarters on a sustained basis before there is some call taken. Though the other pocket which seemed to be doing very well for itself today is the gas companies. So Indraprastha Gas, Gujarat Gas, Mahanagar Gas, each of these is trading at fresh 52-week highs for itself. It may have cooled off from the highs of the day, but certainly trading well. Ajit, any thoughts on these companies?
So Neeraj, you're right that these counters are making newer highs with every passing day, and considering the kind of momentum that we are witnessing in these stocks, obviously not at the current level, but on any consolidation, it's a buy candidate. But for the existing longs, I would suggest one should maintain a stop loss of 2-3% from the recent highs as a trailing stop loss and maintain those positions.
Okay, those are the gas distribution companies. Remember, a lot of brokerages have been coming out with their bullish notes, from the likes of Credit Suisse, then you had UBS, which have turned positive on most of these companies. All right, besides your gas distribution companies, you've got Hemen also, which is inching higher. Pull up Maruti, actually. That one comes out with its numbers tomorrow. Let's see what Maruti is doing ahead of its numbers. Not too much, actually, to say. It's just up about 0.5%. While we'll see how the other automakers also come out with the numbers. But Samir, Maruti, a big number from the auto space, comes out tomorrow. What are the key expectations here?
So I think it can give a margin beat, given that raw material prices, at least on their inventory end, is still lower, and there was certain price increases and the discounts on October to November reduced to a certain extent. So I think there will be a margin upside rise to the estimates. But on the overall, I'm really not optimistic about auto companies given this quarter. So I would rather have a better quarter in Jan as the March ending, and then judge the companies whether the auto slowdown is over or not. Because as of today, I can still see a 30% kind of a downside on registrations overall.
All right, that's on Maruti that reports its numbers this week. It's going to be an important watch as well. But on to something that's more current news. Maharashtra Tourism Minister Aditya Thakere's pilot project to make Mumbai run 24/7 is set to come into effect today itself. Nariman Point, Kalagoda and Bandra Kurla complex are the three areas selected for the same. How is this move likely to benefit businesses of companies? Let's ask Anjan Chatterjee of Speciality Restaurants. He's joining us right now on the phone line. Mr. Chatterjee, thanks very much for taking on the time. Firstly, your take on this particular move.
Yeah.
And do you think this is going to substantially, increase business for a company like yours?
See, very honestly, it is going to be a spurt in the weekend business for sure. And also the food courts are going to do very well. We also have representation in food courts. And honestly speaking, if it was given for tactical areas, for bar, for liquor till 3 a.m., even if it's not whole night, it would have been much, 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 much more effective. But as you know that the binge eating happens, or the binge drinking which happens is weekends for the youngsters and people who go out, the millennials. But at the moment, I think the beginning is very good. And I think that there will be definitely a weekend, Friday, Saturday, Sunday, particularly Friday and Saturday, we would definitely be benefiting.
You feel, how much do you think in terms of percentage will, the footfalls likely increase by over the weekends because of this move, because of the extension?
Yeah, very difficult to estimate, as you understand that it's an experiment and a pilot project, because, many of people, because tourists coming into Bombay would be definitely moving around, but the Bombayite, who's basically otherwise a nocturnal animal, the youngsters in particular, go to the bar more than to go and eat. But definitely the night spots, the places which are cloud kitchens, the places which are in the form of the BKC areas, wherever it's been given in, I think there could be a spurt of, it's very difficult for me to give you a specific percentage, but we will have to wait and watch.
Mr. Chatterjee, the move's definitely being welcomed by the industry. But it's not going to trigger an overnight culture revolution, so to say. I'm sure it's going to come with its own challenges, be it with more manpower, more fixed cost. If it's only about the weekends, then how do you balance increase in revenues with the fixed cost?
As I said rightly, it's an experiment. One has to look at it very carefully because the manpower to return ratio has to be calculated. We can surely put it on pilot on all days to start with, but I'm definite about the fact that Monday to Thursday, people do not have the mentality to go out and eat. We are not in a city like Singapore or evolved countries where you have huge amount of tourists coming in, or Dubai, and the natural footfalls tend to fall down and taper off after 11:30, 12 o'clock. So I think that it is just one of those things which we know that is partially going to do something good, but it will not have the kind of percentage and the kind of number of people who will come and eat so late and continue to be eating whole night. It's something we will have to watch, and it definitely is a change of culture and attitudinal change, which is difficult in our understanding, but anything is possible. So let's put it to pilots.
Sure. Point well taken. Mumbai gets more of domestic tourists vis-a-vis international ones. But since you're mentioning it's a pilot project, can you tell us which of your outlets will kickstart with extension of timing?
We have the main China Asia Kitchen at Palladium. We have the Oberoi Mall. We have the, in BKC also we're doing another one. So all these, primarily the mainland China, and also some places we have in Calcutta. So all these, and the cloud kitchens that we have built, we will be able to extend them further. We're calling it that, whichever cloud kitchen we have, we're calling it Night Bites, and have a special price for that. So, I'm sure this binge eating and the midnight snacking is something where we will benefit from.
Mr. Chatterjee, is this something that you're also going to undertake only from a weekend standpoint, since you said that it's largely going to be beneficial over the weekend and not primarily weekdays? So for you yourself at Speciality Restaurants, are these outlets going to be open over the weekend only for the beginning, or you're going to kickstart for all the days of the week?
We will start with all the days, wait and watch. But what I said was that culturally, historically, and otherwise, people tend to go late because the schools, colleges, offices, there's a weekend holiday. So people don't mind hanging around in the malls, moving around, and we don't have the pressure of a last order, and the liquor is till 1:30. So maybe, extending it till 1:30 of liquor, which is already officially permitted. I think all these combinations work more on a weekend.
Sure, point well taken, of course. And considering the working class that Mumbai has, I think it's going to become difficult on weekdays. Mr. Chatterjee, thanks a lot for joining us and taking us through your thoughts how this will pan out going ahead. As he mentioned, it's going to be a pilot project. They will begin with mainland China. They'll have specialized menu also for the night. But let's see whether it picks up or not. Samir, any thoughts on this?
And also on the back of the fact that when he's talking about college, people hanging out, I mean, the size of their wallet, how much they carry is not much. So it's not.
I think that's why they're designing a new menu for the night.
The spending power is not all that high.
I think this really helps the order in kind of places. Let's say a McDonald's, Domino's. Yeah. This really helps out because I'll just give you an example within my area. So I've been staying there for 10 years. But before this policy, a new McDonald's opened, a small one, kind of an express one, let's call it. And now they're opening that till 3:30 or 4 o'clock in the night. So even if I feel, and the Phoenix one closes out to a certain extent. So they service the whole area from that mall, that small outlet. So they can really help out the profitability of the system. But I think specialty restaurants, when they have large formats, and the whole theme is to walk in and eat, that becomes very difficult for everyone to continue. Like he said, people who are already sitting can extend to 1:30. That sales
but
can
1:30 as it is the time. They are allowed to be open.
Yeah, but the food order kicks out.
Correct.
Last order kicks out. So generally people move out of that place. If you really want to drink, you go to another place. So I think it's too early, but I think on the larger scale, it'll benefit a McDonald's or a Domino's or a smaller outlets vis-a-vis a proper full-fledged restaurant.
Westlife Development, after days of good performance around its numbers, the stock's finally taken a breather today and it's down 1.4%. For the markets, we're worsening a little bit more. So 12,139 on the Nifty. Nifty Bank is at 30,878, so sub 30,900 as well. Looking at individual stocks, and ICICI Bank, Samir, what did you make out of the numbers?
So I think if I remove the SR Steel numbers and if I look at that, So I think NIMs improved to a certain extent. The advances are doing much better as compared to the other private banks. So they are able to gain some market shares over there. Even the subsidiaries are doing much better than expected. So there is a positive movement, but at these kind of valuations, I'll still keep a SIP mode into it. My preference now will be ICICI and Axis Bank rather than HDFC or Kotak as of now.
Okay, and Samir has been maintaining that for a while now. Ajit, on the charts, ICICI Bank, will you take a bet from current levels?
So, yes, Navneet, in fact, if you consider ICICI even at the current levels, the risk to reward is favorable, considering that if you see the other private banking counters, be it Kotak, HDFC, IndusInd Bank, post results, it's still showing resilience at the higher levels and holding very strongly above the short-term moving averages, which indicates that the strength is there. For fresh buying, in fact, after this dip, the stop is closer around 530. So that's the area where one should maintain a stop loss. And 550 to 555, and that's the area where the record high, it made a record high. So that's the area where one should maintain a target.
Okay, that's ICICI Bank. And the other wiki where we got some brokerage notes post the numbers was Ultratech. Remember when the numbers came, they appeared to be slightly on the weaker side, but the commentary was quite strong, and the kicker was the reduction in the debt of almost 2,000 crore rupees of debt reduction in the quarter gone by. Ultratech at 4686 right now. I mean, technically, it's taken support at these levels. Would you trade Ultratech for some sort of gains from here?
Yes and no. Yes, because it's given a breakout after almost 11 trading session sideways movement. Navneet. The range was roughly between 44,100 and 45.50, and we broken out from there. So the first target has been achieved. So, but I would play for a smaller move. Yes, I think we're at 46.83. Maybe around 4800 is the way I would look at. But yeah, it looks good, and the entire cement pack, whether it's ACC, Ultratech, Ambuja. This is not, it used to be an FNO, Navneet, but I think this is stock India Cements. I think that it's technically no looking fine. That might surprise.
Okay. Samir, you preferred Shree Cement over Ultratech, and the reason was Shree Cement is virtually debt-free company. Now that Ultratech has shown how they're reducing their debt, the debt to EBITDA ratio has been coming down. Would you take a relook here?
So I think for me, two positive triggers which came out this quarter, that the integration with the acquisitions, Century and others are going better off. So you're increasing your EBIT per ton over there as well. So you're taking initiatives, and it's now resulting on financials as well.
And full impact will come in quarter 4. Actually.
Yeah, that's what I'm saying. So on the other end, if you see net debt has reduced, so that's a positive sign. But it's again a preemptive move. If you see, the financials were still weaker on the revenue growth, the volume growth and the pricing. There has been a giant increase price which might come in quarter 4. But again, whether it sticks till March ending, that's again a very difficult question to be asked, because the government has always kept a pressure on cement prices to be controlled. Second of all, the commentary was good, but I don't see any major changes happening from here, from January end to March end, that the consumption will really pick off. Because
or
there's a lot
to
of
come
capacity.
From the budget, do you think that could
see, even if there is something really announced for the infra end and the consumption end on the real estate and everything, it again takes time. It doesn't happen over there time. So I rather pick Shree Cement or maybe a JK Lakshmi Cement over Ultratech even right now, because Ultratech becomes more of a national player, and for them to increase their volume takeoff, because they're exposed to every region. So they have a problem with every region. If you have floods, you have a problem with Ultratech. So I think rather than having that national exposure, I'll keep myself more exposed to a north end through Shree Cements on a better balance sheet, and a JK Lakshmi which has much more western and north expansion as well.
The other one, before we go on to Sharad, I want to talk about is Prestige Estates. The strong quarterly results, and the stock had run up ahead of that. It's still in the green, 2% higher for Prestige Estates, 389. Margins came off obviously because of the accounting change, but revenues, profit, EBITDA, everything was up. Hemen, let me actually get a chart check from you. Since it's already run up so much, what would you do with this stock?
Wait for 370 or not participate. We've had a run up. We walked into a consolidation phase. I think 370 is a good enough support. Stop loss of 360. Should bounce back after that above 390. Momentum above 405 and will shoot up above 425.
Okay, that's Prestige Estates. Remember the 9-month volume growth was just about 1% and value growth about 11%. And we spoke to the management. They did indicate they will be looking at launching new projects. But remember, residential projects have not been doing well for the industry per se, but this has outperformed in how Prestige Estates in the last 12 months, the stocks nearly doubled. All right, besides this, I'm sure there are a whole host of other stocks which are buzzing today. So let's find out and go across to Sharad Dubey to find which are those stocks which feature in his list. Sharad, over to you.
Hi Navneet, the first stock is Wockhardt. The stock has been buzzing and it has been the top gain in the Nifty 500 index. The stock is up more than almost 10% today after it came out with its quarterly numbers. The net profit has turned positive after almost 3 years. So in the EBITDA has also risen by almost 6 times to almost 110 crore rupees and margin expansion of more than 1,000 basis points. This is due to lower raw material costs and also employee costs. Up next is your Laupala, which is up almost 7.4% as almost 40 lakh shares have exchanged hands at rupees 190.3 rupees in NSE. The buyers and sellers are not known yet. Next stock is Prestige Estates. As we discussed, the stock is up almost 2.3% as the strong quarterly results have come with revenues rising almost 2.5 times and the net profit rising almost 3 times. Now, if you see the margins, there was a contraction due to Ind AS 116 implications, but the collections did fall despite a strong pre-quarter sales we had seen. And the last stock of the day is Chola Financials, which is up almost 1.8% as almost fresh longs are seen with a high open interest of 33% and the volumes trading at almost its 2.5 days, its 20-day average. Back to you.
Thanks a lot, Sharad, for bringing those Fab 4 stocks of the day. And keep an eye on the markets. Nifty is at 12,127. We are staring at a cut of nearly 120 points. And your 50 DMA is placed somewhere about 12,120. So last week also when the markets were trending lower, I think twice back to back, the bulls defended the 50 DMA. Of course, it was breached in the intraday session, but the closing came above that. So let's see whether we close above the 50 DMA, and that will be a key monitorable today. Having said that, just want to mark few stocks. You've got Edelweiss Financial today in a weak market. It's seen some bit of recovery, so that's locked in upper circuit with gains of about nearly 10%. Of course, we've marked a Wockhardt Pharma. BGR Energy is the other one, which is doing well. That's also gained substantially. Cummins India is sitting with some bit of gains. And Sharad highlighted, and even in the F&O check, we highlighted Cholamandalam Finance. There's significant amount of OI build-up, which is coming for January futures. Today, the stock's up and about. It's come off from the high levels, Hemen. But looking at the open interest action and also the price action that we've seen over the last 1 month for Cholamandalam, what are the key targets here?
335 to 90. I think short term we should be looking at 350 and yeah, around 350 Navneet, because and you know it's on the cusp of a multi-year consolidation, so looks interesting, but yeah, short term 350.
Samir, I want to come to you on this real estate space. For one, we are seeing some bit of an outperformance now from Godrej Properties, but just looking at how the space has been suffering since it's been in a down cycle in the last 6-7 years now. So there's nothing that has happened for any of these stocks to command a valuation of 70 times, which Godrej Properties is, versus the rest of the pack, which is trailing somewhere around 30 times. Such a big differential. Obviously, the model is different, but does it play out well for Godrej Properties versus the others then?
So I think the benefit of being at least on the different model gives that kind of a premium, and I think that can be maintained. But on an absolute basis, if you see that premium is at least 30 to 40% above than what it usually was. So I think that's where the trick part comes. Now launches are better, the sales are better. But again, the whole point is when the whole cycle turns and real estate becomes a better play for a whole wide as an investment. Right now, it's more of tactical trades that, you know, you will see some announcements and there will be revival. But I think another 6 to 9 months and you might see a better off North market, which is very important for the whole nation to pick up the numbers, because North within Delhi, NCR and Mumbai, these are the biggest inventory problems over there right now.
So earlier we were talking to Canfin Homes, and he specifically spoke about the NCR market being the worst hit. And since that is
because that's the largest in
that is the largest, and it's going to take some time. So this excitement around 1 or 2 projects getting launched, don't understand that.
So I think what happens, Devina, it becomes a preempting that kind of a inventory recovery. If you see Canfin, if you see others, the problem becomes that even if a customer really wants to go and buy something right now, the financing is still very limited, and the options for them at the cost which is there, it still becomes very discouraging for him to eventually buy in. The guys who are first time buyers and single unit buyers, they're still doing it. The second unit buyers and the investors all of a sudden have vanished. They'll take at least 6 to 9 months even if the recovery sign comes in. So I think for me, the Delhi NCR pocket has to really come up for the whole pack to contain the inflation. But I think a pocket like a Oberoi is still better off. There are pockets which valuations are still limited. So, and if you see the balance sheets, they're still maintaining that kind of balance sheets, though cash flows are a bit squeezed as of past of couple quarters. DLF shows some kind of improvement on cash flows and all, but sustainability is, I think, my major questions. So I rather give Phoenix Mills a better valuation as compared to Godrej Properties right now. So I rather play real estate till the time it doesn't come better on the residential end through Phoenix Mills and then shift my focus. So I rather be 10-15% late rather than preempting the whole move and again seeing a 20% kind of downside.
Also talking about these housing finance companies, I think what's worked for Canfin Homes is banks are willing to lend to that NBFC. I think 70% of the borrowers are government employees and service classed. So the chances of default are lesser vis-a-vis others, and which is not exactly played out with other housing finance companies. And we've seen the recovery which has come in the last 1 month, and that's been a good recovery compared to any other housing finance company we've not seen. Even in terms of financials for December quarter have not panned out well. So that's Canfin Homes for you. Of course, some profit booking kicking in after the stocks gained nearly 20% in the last 1 month. Okay, moving on. Gopal Agarwal of DSP Investment Managers says broader markets are likely to see earnings recovery this year at the back of significant improvement in commodity prices. Listen in.
I won't stick to a particular theme, but what we are witnessing clearly, there is a real improvement in many of the things. We are seeing like, agriculture commodity prices globally has moved up close to 9.72%, which is a UN Food and Agriculture Price Index. So definitely, which will be positive for agrochemical, pesticide and fertilizer industry. Also, Rabi sowing data is very heartening. So rural economy is likely to turn better. Similarly, we are seeing the signs, that there is a recovery in the commodity prices, especially the industrial commodity, whether it is a domestic cement or steel. So definitely that pocket is also looking interesting. On the financial side, definitely retail lenders are still getting the benefit of a consumption boom in India, and also on the margin trajectory is on upward side, which is also positive. So I will be keeping my portfolio much more broad based rather than narrow, and also keep in mind that any kind of marketer, whether it is oil and gas market, oil marketer or gas marketer, they are also benefiting from the low input prices. So definitely on a broader sense, I would say that market is likely to see earning recovery broad based, and also it will include percolate to the pharma sector also.
You bullish on the oil marketing companies, Gopal? There is one, the crude factor, but two, this whole issue around the constant supply from the CPSE ETF issuances that come in, or for that matter the whole divestment scene surrounding them.
So gas marketing is really a clear winner, and in the oil marketing side, what happened, the problem is on the refining side because of lot of incremental new capacities have come in China and also getting commissioned in USA. So the marketing refining margin outlook is not very strong. Only thing is that there can be some upside can come from IMO 2020, which has not yet kicked in. That's the only positive hope. Otherwise the supply is quite large. So refining is not great, not doing great at this point of time, but definitely marketing per se, the core marketing is doing great, and also there is no overhang of subsidy on the oil marketing companies. So I would say the 2 positive, 1 negative. So net they are still fairly okay in the portfolio.
The capital market link plays, Gopal, and I'm restricting myself to the asset management companies or the life insurance companies, which also now getting the capital market flows. Do you like them, or do you believe they are expensive?
So any business which offers you long-term growth potential and also which is under-penetrated, definitely it gives it will always trade at a higher multiple than the matured businesses. So in that context, you have to look at both life insurance and asset management businesses. But still, I feel that life insurance has much more room to grow, and both in life and non-life. So I am more bullish and constructive on insurance than asset management in my portfolio.
When you say quality attracts a premium, look at Dr. Lal Path Labs. That stock's up and how in the last 1 month has been up 17%, had gone down to lows of 1400 just a few months ago. And then from there, it's scaled back to 1750 in a matter of a month, I think. Yeah, it was in December when it had hit lows of 1400 odd. From there, it's at 1752.
At the time the news came out for
Reliance, yes,
there was these sources, and that's where I said, do a SIP. It's always better. Even if they come, it'll take a while for that competition to kick in. And I think in diagnostic or healthcare space, Dr. Lal is the best place to be exposed right now till the time these pharma companies really come back for at least 2-3 quarters.
Okay, that's Dr. Lal for you, doing extremely well in today's session. I just want to take a look at the Dow futures again, because it seems like things have worsened, and we're seeing that for our markets as well. So 350 points under for Dow futures. For the Nifty, we're down 125 points, with the Nifty bang down 400 points. Now, that's the lowest point of the day for both the indices. Mid caps and small caps that were that had almost a 1% variation or 1% outperformance, that too has started to give, but it's still holding on to that 1% outperformance. Small cap index is absolutely flat. Mid cap index is also marginally under. Is that the trend now, Sameer? That's going to happen. That's something that we're going to witness. It's an 8% outperformance at the start of the year.
So I think it's been a month or maybe mid-December where I started saying that mid caps, it's better to do a SIP. Given 2 reasons. One, the large caps valuations have really stretched out. Whether it's Asian Paints, whether it's HDFC, whether it's other. And the base of the financials and the quarterlies have become big. So reflecting on those kind of a growths and continuing on those kind of growths to maintain the valuations is a very risky bet. It might maintain for a couple of more quarters, but I think it's a better play to shift some amount of money into smaller caps, but don't go into a lump sum investment in mid caps right now, because again there are very specific companies who are outperforming even on financial basis. For me, the priority on mid cap always becomes the balance sheet. Even if your valuations are very low, the balance sheets help you to kind of catch up the rally for next 3 to 5 years, even if the bottom has been formed. So it's better to focus on balance sheets and then pick a basket of it and do a SIP mode. Don't do a lump sum, because otherwise it might become a better exit for another and a bad entry for you. So I think it's better to do a SIP in mid caps, but I think this trend will continue because there's a lot of institutional and large flows coming in. So that's where that really helps the valuations to bottom out.
Okay, well, we've seen the FI flows this month, but it's the domestic institutions which have been selling. Of course, on Friday we did get a buy number, but they've been selling for the last 10 to 12 sessions. I want to pull up Hemen Financial. This one, I believe, comes out with its earnings tomorrow. Ahead of that, there is some weakness which is kicked in here. The stocks was at the lowest point of the day. Some recovery coming by, but the stock's still down about 4%. Very quickly, Ajit, on the charts, with 4% decline at levels of 353, is it poised for further downside?
So, it's had been hovering in this range, close to around 340, 380. So, after retesting the upper band close to around 372 areas, we are seeing this profit taking. So, I feel this consolidation may continue, and a decisive break either side above 370 or below 340 would trigger the next directional move. So, meanwhile, one should wait for any directional trend to kick in.
Okay, that's Hemen Financial, but let's also find out what the dealing rooms have been recommending on a day like this when the markets have corrected sharply. Darshan Mehta joins us with his channel checks. Hi Darshan, good afternoon.
Hi, good afternoon. And I think financials are not finding interest today. I think Pharma as a pack is doing well. But one of the stocks that's been spoken about is Escorts. There's a buzz of a corporate announcement that could come in. Some bit of M&A deal with an overseas player is something that's been spoken about. Decent volumes, 1.8 million shares have been traded. So that's something that the market is talking about. Pharma as a pack doing well. The second and the third largest, most valuable companies by market cap. Both of them are finding focus among some of the domestic mutual funds. Obviously, Dr. Reddy's came out with a very, very strong set of numbers on all parameters. It was a beast. So that is seeing traction. Divi's Lab also hitting a fresh 52-week high in trade today. So there is traction that's happening on the pharma space. And finally, Welspun Corp is the last one. It's up almost 5% in trade today. Dealers indicate that some of the HNIs are very active in the counter and accumulating the counter.
Okay, Darshan, thanks a lot for bringing that dealing room check for us. Even Apollo Hospitals, by the way, has been doing pretty well in last many days. This one too has been hitting its fresh 52-week highs, 1695, up about 1.5%. Before I get a technical view on this one, just want to highlight Nifty is now trading below its 50 DMA, so we've breached that mark. Let's see if the closing can come above that or not. Last week there was some buying which emerged from those levels, so 12,117 on Nifty at day's low with cuts of about 130. First question, Hemen, do you buy this downside, the correction that we've seen? And of course, second, I want to come on Apollo Hospitals.
No, I will wait for 100 points low. 12,040 is when I think it's a buy, so I'll stick to that. Nothing changes. There's been a bearish gap today now, so I think that's a negative. The Bank Nifty bearish gap is almost covered up. The Nifty bearish gap isn't covered up. So, and many of the stocks are looking a bit heavy, so I'll just wait 100 points. Before going long. Apollo Hospitals, all-time high, nothing much to look at. We continue to remain technically positive. We are heading towards 2000. Near term, I'm not sure if the risk-reward ratio is in favor. If the stock moves from 1340 to 1710 in 1.5 months, I would stay away from buying a fresh long position.
Inox Leisure is the other one. You've seen a sudden drop in that counter. Early morning trade, the stock had actually moved to levels of 415, 416. From there, now it's at the lowest point of the day. So one steep drop that you're seeing in the stock right now, which has brought it down by almost 1% now in a matter of a few minutes. From the exhibitors, Samir, which one do you like, a PVR or an Inox? Inox not yet out with numbers, but what do you
So I think my preference is on Inox. Given that the valuation is different right now. But if you see on the number of screens, the footfalls, the kind of margins they have, they're right now exactly where PVR was 3 years back financially in terms of number of screens and how they're kind of expanding on the larger formats. And they're going more now, diversifying from territories concentrated on West. So I think over there, they are going more national. They have a bit of at least 12 to 15 months more of capex to be done properly, so that the SSG on these kind of theaters which are being done on the capex for past 24 months really picks up the numbers and the operating leverage kicks in. So I think it's better to hold on. It might not perform well as compared to PVR in next 6 months and even in this quarter, but I think it's better to do a SIP in Inox rather than doing it in PVR right now.
Okay, that's Inox Leisure. They're 406 on the stock right now. Actually 405, so it's dropping pretty quick. right now. Polycab's up 1,000 now, so 998 on the counter. A big sharp correction post its numbers. Decent quarter, but I guess there was too much of an anticipation by the rumor sell the news. So you've got the results that were out, and therefore tremendous profit taking, bringing the stock down to levels of 998. Sameer, do you track this one?
I do track this one, but again, that kind of valuations, again, your market share is already high. Now, how do you increase? Either the market has to increase itself, the pie has to increase, the imports have to really go down, and then only the market opens up for you, because either you really sacrifice on your margins other way to cut in the competitor.
But this quarter was aided
right?
more by exports. They
Yeah, that's so the export market also you're expanding, but again your balance sheet goes for a toss then. Your receivables are more. It goes at least 120 or 90 days when you start exporting, and then your balance sheet gets sacrificed. So it's a very tricky situation for them. And if they are increasing by exports, I would still give them a couple of quarters, see the balance sheet, how it has churned in last 6 months when they've expanded on the exports. I would still rather play it for domestic story rather than the export story, because again the receivable story and the orders execution, everything becomes very volatile when you go outside of India, and then a lot of things go out of your control, and the valuations then have a big downside risk than being a domestic player.
Okay, that's Polycab for you, but just few minutes to go from markets to shut shop, and we're also at the lowest point, so let's get you some closing strategies from our techies. Ajit, any STBT or any BTST for tomorrow's trade?
So, Navneet, I'll go with the STBT. PNB has been trading in this triangular pattern and is almost on the verge of breakdown from the same. So, it's a very strong short candidate at the current level. So, one can go short at the current levels with stop of around 63 and target of 57.56.
Okay, that's a sell on PNB. That's also at the lowest point of the day. Hemen, your top call?
STBT on Tata Chemicals.
Target, stop loss?
1% stop loss, 2% target.
Okay, that's Tata Chemicals is also, by the way, at the lowest point of the day, down 1%. I want to pull up Escorts. That stock's been bucking the trend in last 1 month or so. It's up around 18% or so. And in a weak market also, it's holding up to its gains, 732. And there you go, last 1 month, significant gains coming by. Hemen, on the charts, if somebody's still sitting with longs on Escorts, what do you recommend?
If they are still sitting on longs in Escorts, I'd book some profit. It's not a short, but I'd book some profit, yeah.
Okay. Sameer, any thoughts on Escorts? If not, any idea that you want to share with our viewers?
So I think the tractor segment is seeing some kind of change in the market shares, and Escorts is picking up a bit. Even the exports are helping them off. So if you really have to pick between the M&M and the Escorts right now, at this moment, at this juncture, I'd rather pick Escorts over here, because I feel there is more scope of a market share gain for them in coming quarters. They have capacity sitting idle. Their dealer network has lower inventory with them. So I think it'll be better. So whoever catches the upturn first, I think Escorts will be a better off play right now.
All right, and they also come out with their earnings on Wednesday, that's day after tomorrow, so keep a tab on this stock. Sameer, we leave it on that note. Appreciate you joining us and taking us through your thoughts on markets. Nifty at very close to that levels of 12,100, and one high beta stock which is holding its gains, I guess, is RBL Bank. If you could just pull up the stock price of that, while we've seen the Nifty Bank also dropping 1.3%, RBL Bank is sitting with gains of 2%. Ajit, what do you do with this, with gains of 2% in a weak market like today's? Would you take any fresh position now on the long side?
See, you can see that the stock has been underperforming for quite some time, and after the recent attempt, the failed attempt rather to cross that resistance area of 100 EMA on the daily chart, we are seeing the stock is taking a pause. But I feel it's a shorting opportunity rather than initiating any fresh longs. So yes, one can go short close to around 340, 342 spot levels, and 352 should be a stop loss, and close to around the 310, 300 area, that should be a target.
Okay, that's a sell. In fact, Ajit is recommending use these recoveries in RBL Bank to create a net short position. And remember, of course, the stock's not been doing well. The numbers were also not encouraging. I want to pull up the India VIX that surged about 10 to 11% as the market is headed towards its lowest point of the day. India Volatility Index has inched sharply higher in today's session. That's up about 10 to 11%. Hemen, of course, looking at the volatility, the one stock nifty gainer, that's Dr. Reddy's, which is holding on due to good set of numbers. Operationally, they were good. Would you advise, just looking at the volatility in the market now, global cues have been impacting us. Would you advise somebody to cover longs, or they can, carry over and expect higher levels?
In Dr. Reddy's?
Yes.
Well, it's the only bright shining spot, but no, I'd book out.
That be a wiser move.
Yeah, because there's nothing wrong with it. Like I said, I like Pharma. I think Dr. Reddy's, right now it sounds a bit preposterous. I think we are heading towards 4,500 in the next 3 years. But currently, a mainline stock, 7%, 6% move, expecting it to carry over for next day, I think it's a tall order.
Right, gentlemen, just stay on with us, Ajit as well as Hemen. Coming back to you for your closing comments, but just tell you how we're wrapping out for the day. And the start of the expiry week has not been all that good. So we've got the index giving up 137 points, down more than 1%. Similar is the case with the Nifty Bank. We're over 400 points down this afternoon, so 30,824. Probably the only bright spots would be an ICICI Bank, which delivered on its quarterly performance and therefore is going to end the day marginally in the green. In the broader market space, the outperformance differential is almost 1% now, more than 1% for the mid caps and the small cap. The small cap index is actually going to close absolutely flat with a slight positive bias. The mid cap index, on the other hand, has lost closer to 0.5%. So that has actually narrowed the differential towards the end of the session, but it did okay at the start of the trading day. Coming down to the individual movers then, we've got Dr. Reddy's, which has done exceptionally well in today's session on the back of results. M&M is up about 2%. Remember, you've got Maruti that reports numbers this week, so you're going to keep a close eye out on that one as well. Cipla, Ultratech Cement continues to do well post-results. Eicher, Tech Mahindra, Axis and ICICI Bank from the banking pack are in the green this afternoon. What's losing out? Vedanta, the entire metals pocket is down and out. So 4.5% apiece for JSW Steel, Tata Steel, Vedanta, Hindalco also down 4%. Losing out, and the bigger key culprit are these two, HDFC Bank and HDFC Limited. Ahead of numbers, HDFC Limited is down 2.5%, so let's see what that throws up. SBI too looking weak this afternoon. But Navneet, this is what we've got in terms of the large caps, mid caps. Like we said, the outperformance is pretty predominant out there. Individual stocks doing well.
Yeah, of course, and a lot of result reaction also coming by. But largely, the market breadth was weak owing to the concerns that we've seen globally. And as you can see, Nifty mid cap index closing at the lowest point of the day with cuts of nearly 0.5%. Let me some slight outperformance. I think small cap index closing with minor green ticks. Wockhardt came out with the numbers and they posted a profit figure nearly after 3 years. So, and that stock's locked in upper circuit with gains of about 20%. Good going here. They posted a profit of nearly 19 crore. Shree Cement from the cement pack held out today in a weak market, and this one gained about nearly 1 to 1.5%. ICICI Prudential was doing good. I guess throughout the session, the stock remained in the positive territory, and the closing is also at levels of 526. Pharma stocks were in focus, Aurobindo Pharma being one of them, and that one gained about 2%. You also had something like Apollo Hospital, which has been trading at its fresh 52-week high almost every single day. So this one's closed just a tad below the mark of 1700. In a weak market, you had RBL Bank, surprising because it's a high beta counter from the private banking space. Not been a very strong banking stock as well in the past 6 months or so, but this one's closing with gains of about 2%. And you had Escorts, 18% move in last 1 month, and this one's going to come out with its numbers day after tomorrow, holding on to the gains, closing at levels of about 733. You had certain losers. M&M Financial was in focus. I guess it comes out with its earnings tomorrow. Ahead of that, there was some selling scene. Metal stocks were weak, so JSPL, Steel Authority, both of them were down. You had Siemens after announcing the acquisition of CNS Electrical. In the second half of the session, last 1 hour, 1.5 hour, there was selling pressure which came by. And of course, if you read the Motilal Oswal note, they were not too gung-ho about how they're using the cash for these acquisition. Bank of Baroda reacted negatively to the numbers, which were of course weak, and you also had from the small cap space, Orient Paper, which just came out with its numbers a while back. Not good set of numbers, and hence that reaction on the screen, 7 to 7.5% lower.
The close for the day, as we have it, the final tally, which is gonna come up on your screen, 1% under for both Nifty Bank as well as the Nifty 50, 420 points down for the Nifty Bank. We're closing sub the 50-day moving average for the Nifty 50 as well, 12,111. Individual point contributions coming in. We've got obviously your large heavyweights like HDFC Bank and HDFC Limited, both of them doing the bulk of the losses here along with the Reliance Industry. So a very potent concoction there for losses. You've got Kotak Mahindra Bank there also down about 8 points.
All right, and the volatility is back in this market. So India Wix today is closing with gains of about 10 to 11%. It could not be a comforting sign for the bulls in case if there is any sort of recovery which is to come by. But remember, today's move was largely owing to global cues as well. And the market that too turned in favor of the declines, though you did see advances taking over for a certain time period. But look at the gap, which is widened in the last half an hour of trade, telling you the entire listed universe was still not doing well today.
And the turnover, that's the final gauge of how we've done in terms of market participation. On the cash side, we're almost at par. On the futures and options side, about 11.5. So not a very heavy day in terms of the trading activity, but I guess the price action more volatile. Getting in closing comments, and Ajit, Mishra, what are we going to watch out for tomorrow?
So Devina, tomorrow the first thing that I'll look at is Bank Nifty, because though yes, Nifty has closed this 50 days daily moving averages, but I feel that the whole underperformance largely due to this the kind of pressure that we are seeing in the banking pack. So 30,750 is the area where Bank Nifty has 100 days exponential moving average. And in case if it fails to hold the same, then this decline is here to stay, and we might see Nifty gradually drifting lower towards 11,950 zone also.
Hemen?
Well, like Navneet mentioned, the previous support level just below 12.1 should provide some respite, but I feel we are heading towards 12,040, 12,000, and I don't see too much downside beyond that, because I think by that time even the Bank Nifty would be stable enough at 30,500, so everything should synchronize. And yes, like Navneet also mentioned, the VIX is 17. Maybe currently it's not showing anything, but 12,000 and a VIX below 15, I think that would be the time to act. Currently, no.
Okay. We'll leave it at that, gentlemen. Hemen as well as Ajit, thank you very much for joining us this afternoon. And with that, it's also a wrap here on Countdown. From Navneet, myself, the entire team that's put the show together. Neeraj is missing, so probably from his side too. Thank you so much for watching. Market Wrap comes up next.